G'day everyone, welcome back to Pete's Investing. Pardon the voice, I've got a bit of a cold, so hopefully I can get through without sneezing or coughing. We've got a US dollar analysis today, and this is the weekly and daily. The weekly showing a bearish signal and the daily showing a bullish, so uncertainty about the general trend if you're a trend trader. But I'll go through, there is a bearish divergence playing out on the hourly chart. I'll go that in a minute. First off, on the weekly, you can see here we've got the triple moving average of the price chart, the moving average of the CCI 150, and also our oscillator are showing bearish signals. So it's giving us a bearish signal primarily on the weekly, but you can see there it's pretty flat in this range at the moment. On the daily, likewise, it's giving us a bullish signal. You see there the oscillator is turning up, likewise the CCI and our moving averages. Now it was approaching this key support area at 10.050 after bouncing off it a few times back in end of April, early May, and it's making some further retrace back to this range here on the daily chart. So again, we've got a bit of a ways to go before understanding which way it goes primarily, if it's going to continue on a downtrend as per the weekly or break up into a bullish momentum. On the hourly though, we have a bit of a divergence playing out. You've got a bit of history here. First off, a bearish divergence on the CCI versus a bullish divergence on the price chart. This broke below our channel and hit our target area. Then we hit this bullish divergence here on the CCI versus a bearish on the price chart. It broke up from our channel there. If you had you drawn let me draw it so you don't get too confused. If I draw a channel between that divergence range, it broke up in our range there and hit our closest Fibonacci range in that area, and it then bounced to the downside, so hit our target there. Let me just get rid of some of this to make it a bit neater. Get rid of the Fibonacci as well. I'll leave the targets in there. So at the moment we've got this bearish divergence on the CCI versus a bullish divergence on the price chart. The way we look at that, again, we draw the channel down to our lowest level within that range, and it's broken down, a fresh breakout of our channel there. So where we look at a target will be from that recent low Fibonacci to that high. So we're going to have a target range. We get very conservative targets here. We don't get anything too greedy. That'll be our initial target between the 50% and the 61% level. Now if it breaks through that, we're going to see further declines, but that'll be our initial target area of this little range, this little divergence here. So that's where we are at the moment. There's two different strategies used here. One is the divergence, and secondary is the trading on the lower time frame using the weekly and daily time frame, which are uncertain at the moment. So to understand how to trade this and any other trading strategies we've covered in the past, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.